guys! In this video, I'll be explaining candlestick charts for beginners. So, let's go into the video. So, what are candlestick charts? Candlestick charts are a type of price charts used to describe price movements of a stock. History of candlesticks. Candlestick charts were developed in the 18th century by Munehisa Homa, a Japanese rice trader. They were introduced to the Western world by Steve Nissen in his book called Japanese Candlestick Charting Techniques. Why should we use candlestick charts? Candlestick charts are famous and widely used due to the fact that they show precise price movements. What I mean by this is that when you use a line chart, you can only see the closing prices of the stock. Therefore, you can't see much except the overall trend. If you were to use a bar chart, though you can find the open, close, high and low, they're hard to understand and derive the trend with. Now, this is why candlesticks are important. Let's see the parts of a candlestick to understand this further. This candle is called a bullish candle. When a candle is bullish, the close of the candle is higher than the open of the candle. The high of the candle is the highest price the candle has experienced. It's above the upper wick of the candle. An upper shadow or upper wick is the vertical line above the close of the candle. The body of the candle is the part in between the open and the close. Is the colored part of the candlestick. The lower shadow or wick is the vertical line below the open of the candle. These are all the parts of a bullish candle. Now the parts of a bearish candle have the same terminology but have some differences. Let's take a closer look at the parts of a bearish candle. This candlestick is a bearish candle. When a candle is bearish, the close of the candle is below the open of the candle. The high and low of the candle are also the highest price and the lowest price the candle has experienced. The upper shadow or wick is the vertical line above the open of the candle for a bearish candle. The lower shadow or wick is the vertical line below the close of the candle. The body of the candle is again the part in between the open and the close of the candle. This is the colored part of the candlestick. Now what if the candle is neither bullish nor bearish? This kind of candlestick is called a doji. On this image, the candle does not have a body. It is also called a doji if there's a very small body compared to its wicks. A doji should have long wicks compared to its body to signify that it is a doji. What does a doji show? When there is a doji, it means that neither the buyers nor the sellers are in control of the stock. Therefore, this is called an indecisive pattern. The battle between the bulls and the bears. Each candle represents the battle between the bulls and the bears, the bulls being the buyers and the bears being the sellers. The movements of the candle show what is going on in the battle, and the entire candlestick shows which side is winning the battle. In every new candle, the same war continues. Time frames. A time frame is a time represented by each candle on the chart. By this, I mean that a time frame is the time taken from the open to the close of each candle on the chart. Now I'm looking at Tesla's monthly chart. This candle is a bullish candle. That's because its open is again over its close and it has almost no wicks. This candle is also a bullish candle, and it's because its open is again over its close. This is SPY's weekly chart. This candle is again a bullish candle. That is also because the close of the candle is above the open. This candle on the chart is a doji. That's because even though it has a body, it's not that much compared to its wicks. This candle is a bearish candle. That's because its close is below its open. Therefore, the stock has gone down in price in that time period. This candlestick is a bearish candle. That's because again its close is below its open. Thank you for watching. I'm gonna upload more videos on trading, so please subscribe.